Hi, we're back in the afternoon session of the Singular Research 12th Annual Best of the Uncovered, and we've got a very interesting company here. I'm here with the president of Amrk Precious Metals, ticker symbol AMRK. I'm here with Thor Durgam. And Thor, I guess, why don't we get started with just kind of, for someone that doesn't know the story, just a brief kind of a flyover of what is Amrk?
Sure. Amrk Precious Metals is North America's largest physical metal merchant. That means that we make a two-way market in gold, silver, platinum, palladium products. Our customers include large financial institutions, industrial manufacturers, and the retailers. We do not do direct to retail, however we support and service the internet retail, TV, radio side of the business as well. And in addition to providing their product, we provide them turnkey services including hedging, liquidity vehicles, and full service logistics.
That's quite a bit. So in terms of what drives the needle at Amrk, I know volatility, trading, that's good when you're making both sides of the market or a market maker, but in terms of just organic growth, what drives the situation?
So although we are fully hedged at all times, we don't take market risk in the metals. Volatility and an increase in precious metals demand causes the premium spreads, the amount of cost over the underlying spot value, to expand. And so during times of high volatility, increased metals demand, there is significant potential for higher sales and higher gross profit per unit. Organically, especially like periods now where market's a little slower, we look for interesting acquisitions that complement our current base, and we have, over the past 5 years in particular, significantly expanded our service offerings. Historically, we were just a two-way market maker. Now, in addition to being a two-way market maker, we provide our customers liquidity, we provide them inventory services, we make specialty programs, we offer minting services. So we've really worked to create a full-service platform that we can market in any market conditions and grow the business and remain profitable.
Now, you referred to a couple of acquisitions over the recent near-term year or so. Can you tell us a little bit about those and how they strategically fit into the picture?
Sure. So last September of 16, we acquired a majority interest in SilverTowne Mint. SilverTowne is a silver manufacturing facility that makes private label products, including the SilverTowne product themselves. In addition, we make product for our customers. Many of our customers want their own small run private label products. We'll make those products for them. We'll charge them for the dyes, we'll charge them for the manufacturing, and provide product to them. Additionally, as an example, we're going to make, the USOC has given us the rights to make Olympic products for the next few Olympics, and we will manufacture those products at our facility.
Wow, those are collector's items.
The Olympic programs are an interesting opportunity, and yes, we'll definitely work with marketing partners as well to see what we can do with those products. We were involved in the 2008 Vancouver Olympics and marketed those products. This is interesting in that case we were just the distributor. Today we're actually going to make the products as well, so it's an exciting opportunity for us. Additionally, we acquired recently a TV and radio retailer, which again, when you look at our financial institution side of our business, our industrial side, our third type of customer, retail, the internet retail side has grown immensely. The TV, radio, and internet side of the business today has gone from 15 to 20% of our business just 5 years ago to half of our business today. So acquisitions in that space are important to our ability to grow, and we look for platforms that have a unique aspect where we have less of a presence. So, for example, we've invested in the internet retail side. We have investments in 2 internet retailers. We've always been significant suppliers for the TV and radio side, but as an example, Goldline, our recent acquisition, we were supplying half of their product by acquiring them and supplying all of their product, we've created a larger customer. And in fact, the supplier the other half was our largest competitor. So we look for opportunities like that where it allows us to expand our presence in markets where there's a little more pie to be had in that type of customer space.
Terrific. Now, let's talk a little bit about volatility and how it impacts like the bottom line with Amrk. And I would say vol has kind of come in a bit since Trump was elected.
Yes.
And who knows why? We can all speculate as to why. But interest rates may be rising. So in terms of that, this trough may be one spot to the other, or maybe the vol will pick up too with interest rates.
Yes.
I mean, how would you approach this next 12, 14 months, 24 months?
Well, it's interesting. Well, let's assume that the next 12 to 14 months we were to see a continued period of low volatility. We will definitely continue to manage costs. We will look for unique opportunities. I think the biggest benefit and opportunity in this market is there's a lot of undervalued assets. There's folks out there in our space that are struggling and looking for financial assistance, looking for exit strategies. It creates a lot of unique opportunities for us to utilize the strength of our balance sheet and acquire assets at a discount. The comment you made on interest rates is fascinating because people don't think about us as a company where higher interest rates are good for us because we do so much borrowing. However, the borrowing that we do, we are also a provider of capital as well. So it allows us to significantly increase our spreads as rates rise, and we also earn contango on the hedging that we do.
Wow,
so as rates rise, we have in excess of $500 million finance book. And so just imagine if interest rates rise and we're able to expand that, 50 or 100 basis points, it represents significant profit opportunity for us.
Sure. So when we look at your company and its very unique positioning in a category we call financial specialty, who would be kind of sort of like Amrk that we would look to?
Yeah, it's tough. The only public company out there that does some of what we do, and it's only a small part of their business, is INTL, FC Stone.
Mm-hmm. Yeah.
They do break precious metals out as a segment, so there is some interesting information to see in there as it compares to our business. But other than that, there's really no direct competitors. On the financial institution side, you could argue that in certain transaction spaces we may compete with the UBSs and the HSBC of the world, although obviously they're significantly larger than us. In the middle market, there are two pretty strong private competitors that do much of what we do. But beyond that, there really aren't a lot of public comps out there for our company, unfortunately.
Yeah. Well, it makes it unique and creative. There's room for growth, and you're pretty unique in this space. I'd say that's a real benefit to a company like yours. When we look at the long-term picture in your space and combined with the average person, their exposure to precious metals, what's the correlation? How do you see that fitting in?
I think that it's funny. I think going all the way back to 1980, when you saw huge increases in prices of gold and silver, and it collapsed. There was virtually no interest in precious metals, really. You saw a little bit of an uptick in 2000, but beyond that, it was really a very quiet sector until the financial crisis. And the financial crisis really changed the face of the business. And now today, you look at the size of the investment market out there. Many people believe that 5 to 10% of their assets should be in precious metals as a countercyclical. You've seen the launch of ETFs. The point being that there's just so much more information, there's been so much more education out there about the benefit of precious metals that the long-term picture is actually quite bullish. You're always going to see periods like we're seeing today where you have a slower market, but again, that creates benefit as well, where we're able to acquire undervalued assets. It allows us to further expand our platform. And the other thing that we've seen that's kind of interesting is when you have a longer period of low volatility, you tend to have this coiling effect. And when it goes, it really goes, and you see a much stronger performance period coming out of extended weaker periods.
Wow.
But we're always a business that's quite comfortable managing through tougher times, and that's what we'll continue to do. But I think to your point, it's interesting to see where the equities are today. There's been less interest in flight to quality, but I do. We're not going to wait around for this, but I do believe that it's a matter of time before we see the return to significant demand for our products.
Terrific. So that's Amrk, servicing the precious metals space, where certainly at Singular we feel there's quite an opportunity with a novel, unique, well-managed company like Amrk. So thank you for coming, Thor.
Thank you.
It's been a real pleasure.
Nice to see you.